The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Man, excellent, man. Back again. Man, this the market. Man, we're back in rally mode. But be careful. Be careful. You know, one of the main things in the topic of this week is scared money does not make ... or money. If you ever heard that saying, scared money does not make money. Man, these markets like this create opportunity. Right? And but you got to prepare for the opportunity. That's what we're going to talk about tonight. We're going to talk about how to prepare for the next stock market crash, which will always be coming. All right. Next stock market crash is coming. How to, we're going to go into charts. We're going to talk about market communication. Man, and I have 11 step formulas how to prepare for the next stock market crash. I hope everybody is doing well. Hope everybody's having a good week. Man, my family and I, we just, a week back from vacation, I was talking to my wife, and we was like, it's like we never even left. I mean, we had a fantastic vacation, but it was like we didn't even leave. We didn't go anywhere. You know, we kind of back into the grind, back into the hustle. But it's just to let you know, it's real important that, when you travel, when you do things like that, you can't use debt, right? Can't bring the cost of the vacation home for you. You got to pay for everything and let that be that. That's what I say about it. Because, easily, you could easily spend a whole lot of money on vacation that you don't have. And then you have to come back home and pay the consequences of having more debt payments or being more in debt. So it's better to create a system where you're saving, for a vacation, or you're investing for a vacation. Let's even talk about that. Or you're investing or saving for a vacation. All right. So look, we're going to go into all those things. And so, man, please like, subscribe, and share. Please share my show. Trying to get my message out there, trying to grow my audience. So please like, subscribe, and share the show. All right. Disclaimer: the information provided in the First Fruit Stock Club podcast is for education and information purposes only and should not be considered financial, investment, tax, or legal advice. The views expressed by the host and guests are of their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Man, it is nice to have the market, start, heading back towards this high. And, but, this also, the market presented us with great opportunities, right? And we're going to go through the charts, opportunities where you can make a large percentage of your salary, if not your whole salary, in a few weeks, right? That's crazy, right? You can make significant amount of money within a few weeks if you have a plan, if you have a strategy, and if you're not be reckless about going out and investing. You need a strategy. You need a plan to help you to take advantage of the opportunity that the market gives us. And it was a lot. It was a lot going on in the market. And there was a lot of news out there for you to be scared and for you to be nervous about what was going on. And we're still seeing some of the residue of the markets and what's been going on in regards to the high gas prices, right? Inflation was already high and it's even higher because oil affects everything. It's in everything. So, man, you have to not be afraid and understand that, it's an opportunity, but you got to block out the noise. It's a lot of noise out there, right? And it can make you nervous, but I've been through a few of these. I'm not going to tell you my age, but I've been through a few of these, right? And what I'm going to show you when I go through these initial charts is that, man, we've always recovered. I'm not saying that things will always happen, right? And the market will always go up, but the market is designed to go up, right? The market is designed to go up. So when you get an opportunity in a dip, if you have a strategy to go in there and buy stocks, right? And use strategies to magnify and create the savings that you always wanted. I was listening to, I forgot what I was listening to, but it was talking about how hard it is just to save, right? Because when you look at the real cost of inflation, the real cost of things, 20, 30%, 40% on some items. Talking about discussing, the cost of a new car, cost of a house up 50% in the last couple of new car, food, right? All these costs go up. And therefore, you used to could just count on your salary and if you saved. But it becomes very, very hard to save. It becomes hard to save if you, right, aren't saving in a vehicle that's going to outpace inflation. That means if inflation is at 7, if you can earn 20%, then you can get ahead of this pull on your income, which is inflation. It's a pull on your income, right? And then put on top of this is tax time. And you're lucky if you can get a tax return. But you got to pay the cost of living here and the cost of living here in the United States. The cost is got to pay your taxes. That's another thing that's on pound. So you got inflation, taxes, and then we don't know. Increasing oil prices increases the probability of a recession, right? So as these gas prices and as oil prices, the price per barrel goes up, it increases the probability of a recession. What happens during a recession? People lose, employers have to cut back because their revenues aren't as strong. They're not as busy, so they're going to have to find some areas to cut back. Right? So all these things are going on. And today you just have to be an investor. I'm always here. And this is what I thought, where I know it's a lot of things on the internet. You can laugh, you can doom scroll, but sometimes you need to get some education. You may have a reality check. It's like, it's really time for me to get serious and for me to make some moves and do some things differently. Because whatever your situation is, there's someone who solved it. Right? There's someone who solved it. So, man, I really want to So let me get into this topic, and let's get into the markets real quick. So the market closed today down 72 points. The Dow Jones Industrial Average, the S&P 500 closed up 55 points, and the NASDAQ was on fire today. The NASDAQ was on fire for the last couple of days, closed up 376 points. The Dow Jones Industrial Average, right, closed up, and this is, and I did a longer chart. I usually do a shorter chart. Time frame is a week to week, but I have a specific reason why I'm doing a longer chart, 5-year chart, right? And if you look through this chart, you can see all these little dips, bunch of dips, man. And these dips, as you see, we've had comebacks, right? And it doesn't mean that, you know, there's always risk in the stock market. Investing in, you know, when a market has a downturn, you know, we had a you know, the market didn't move. I remember when I became a financial advisor, the market didn't move for about 10 years. It dipped down after in 2000, after the dot-com crash. But that was one of the greatest times to start buying some of those internet companies, such as a Microsoft, such as a Amazon, which is on fire right now, right? It was a great time to buy some of those companies. And then when you fast forward, you're up thousands of %, right? If you would have just invested in some of those times where the market dipped, it's life-changing money, right? Life-changing money, multiple of your salary money, right? Life becomes a lot easier when you have access to a multiple of your salary, a few years of your salary put away. You know, you're just not as worried about everything that goes on. All right, so you look at the dips, and it's just the market gives you opportunities, but you have to be prepared. Because, like I said, shoot, man, you needed the money, but guess what? Got tax time coming up. Man, we were just on vacation, spring break, right? That was extra money, right? We could have put into there's always a reason not to invest, not to find a way to invest. That's why you have to plan your way into finding these dips in the market. You have to plan it. Can't just get up and do it and think, oh, I'm gonna do it. And I have the investment club, and a lot of times I've talked to a lot of people, and a lot of people, I say, look, you know, you should join the club. And I was telling people, hey, look, you know, it's perfect time. I've seen this setup before. Join, come on and join. And, you know, people drag their feet. People think I'm, you know, what I charge for the club, you know, is for me. But when I approach you about the club, I don't approach everybody. When I approach you about the club, it is because that you're going to get so much value out of this. It's going to change your life, right? And the information I've changed my life. It changed my life financially, right? So we can make some different decisions. So you can make some different decisions for your family. And not only that, my kids are going to know about it. So when you don't involve yourself in the stock market, and you don't involve your family members in the stock market, then it becomes generational, financial, and I don't want to say curse, but generational financial problems where you don't access the real wealth in this country. The real wealth in this country is in this chart right here that I'm showing you. This is where the real wealth is. It isn't in the salary. A man can become a trillionaire. Think about it. A man can become a trillionaire because he has a company that is listed on a stock exchange. It's not because, yeah, he's smart and his ideas are great, but they have to be funded. His idea has to be funded. And when his ideas are funded on the stock market, then he becomes a trillionaire. And if you live in this country and you're blessed to have access, because not everybody has access to this market. Everybody doesn't have access to this market, right? A market can take somebody and make them a trillionaire, and you have access to that. When you don't accept access to that, right? It's like the saying goes, the joke was like, God, I prayed to you and you didn't send me. Man, I gave you the stock market. Everybody around the world wants to get access to your market. Gave you a stock market. You live in the greatest financial country in the world that has done over $30 trillion, that most people can get a job if they want it, even though now it's a little harder period of time with jobbing, but it will change. Right? But you have access to this. And when you don't use what you have, especially in this market, especially in this economy that's designed always to move forward, right? And it's moving forward. And when it's moving forward, right, that means incomes rise too. So everybody, of course, right, you get mad when prices go up, but guess what's going up? Income. Now, incomes may not go up at the rate of prices, but because we've had issues in the past and there's so much money in the economy right now, inflation, there's a lot of money chasing little goods, which causes inflation. So therefore, what you have to do is you have to become an investor. It's not a decision. You have to do it. All right. So look, let me get into what I designed. Get off the soapbox. There's another one, the S&P 500. Man, we hit 7,000, and look at the dips. Opportunity. Look at that. Opportunity for you to change where you are financially, not only now, but for generations. When you learn about the stock market and you teach your kids, and your kids teach their kids, you change it for generations. The NASDAQ. Right? Look at those dips. That's life-changing money when you buy one of those dips. That's being able to have a couple of salaries set aside in the stock market when you buy one of those dips. Right? But that's what it does. So let's get into what I came here today and get on my side. But scared money will not make you money, will make wealth. All right? How to prepare for the next market crash. I'm going to go a little extra tonight. I usually keep it at 30 minutes, but we'll go. All right, so titles. Scared money will not make money. How to prepare for the next stock market crash. All right, so look. The truth about market fear. All right. The biggest money is made in uncomfortable markets. Most investors freeze during downturns. Fear is not the problem. It's lack of preparation. So today is you're going to learn how to prepare for this, how to prepare for that next dip, right? So you can position yourself. How do we do that? How do we prepare for it so it doesn't happen and we're stuck in the news and we're stuck doom scrolling and seeing all the bad stuff that's coming out, but we're preparing for ourselves financially to move our family forward. Don't just celebrate rising markets. Start preparing for the next downturn. Build cash positions intentionally. The time to prepare for the storm is when the sun is out. Now that the market's on the rise, now it's time for you to start preparing for the next crash. It's crazy, right? The market just started going up. Yes, you should be preparing now for the next crash. Because we're just a few percentages off of all-time high in the market for most markets. And that's where we are. So you have to build your shopping list, right? You need to build a shopping list, right? You got 3 tiers. You got dream buys, strong value, and starter positions. All right. Some of the stocks that may have been very expensive, if you have a concept of evaluation, right? And you have to wait. Sometimes you have to wait for a pullback, an opportunity, and those dips that I show you presents that opportunity for you to get in to buy some of your favorite companies. All right. So position your capital, keep 20, 50% of your cash. So when the market is rising like this, and I've been telling everybody in the club, look, you got to invest during a downturn. So we've been investing during a downturn, and now we've been able to get some profits. All right. So now we take some of those profits, put aside, and we separated long-term investing opportunity, right? And you need to have prepared cash available. All right. So, I'm not saying that you should just put all your money in cash right now. That's not what we're doing. We're saying that new money that you may be put into the market, it's a great time to just put some cash to the side and prepare right now for the next market. 20 to 50% or whatever you're going to put in the market, I think is a good allocation, right? And once the market comes again, then you'll have money saved for that period of time. Decide before the crash happens. Use the percentage off of highs, right? So 20%, 30%, 50% technical support levels. And the problem is that this market only reached, I think, close to 10%. That's why I tell my market, we always have to buy. We always have to be buying. Now we're buying at a certain percentage. We're buying a certain percentage of our funds when the market downturn, as I said in the last, buying a percentage, and because we have cash available and we want to maximize our cash by buying as close as we can, we're not going to, we're not going to absolutely find a bottom, but we want to continue to buy during the market downturn when it's downturning. So you have to have technical support levels for the market, all right? You have to control the noise. Market communication. Remember, market communication controls the positive narrative or the negative narrative, right? And when you listen to the market and you hear all about the Strait of Hormuz and the gas prices and all that noise and it pounds on you, you'll become emotional about the market when not just having a strategy. All right? So you have to prepare now and understand that the noise is going to come, right? The noise is coming, and you need to be able to see through the noise, go through the headlines, and understand the financial background of the company, financials, earning reports, history of the company, how much debt they have, cash to debt ratios, their return on capital. You need to have these things already mapped out before this downturn comes. All right? And the market will give us another opportunity. Think 6 to 12 months, not this market, right? But every market comeback, all right, or recovery will not last a few weeks like this one did. It's the last couple of years. If you didn't get in, when the market started turning, you kind of missed out. So you need to really, really think, and there will be a time where it's going to be 2 to 3 years. I don't know when. There's a lot of people in the stock market now that are investing. A lot of people still aren't in the market, or a lot of people still don't own what's called a brokerage account. But I guess in the old days, you can say 6 to 12 months for a recovery, or 2 to 5 years. Now it's accelerated, right? It's accelerated, right? And now the recovery is a couple of weeks to a month. That's been a recovery time, right? So yeah, you have to. That's another step you need to take. And man, scale into positions. All right. Having a load of cash. Say we take 25% when the market's down 20%, then another 25 when the market's down 30%, another 25% the market's at 40%. And then the last bit, it'd be at extreme panic. This is a strategy you probably could have used last year. And like I said, this recovery was really fast, a couple of weeks, but you never know what the next one is going to be like. So you always have to plan for longer than shorter. You don't know. So you still, by having a strategy and being prepared and understand that we can hit those levels is a great opportunity. All right. Know what not to buy and to avoid. Weak companies, as I discussed, high debt businesses, hype stock and earnings, and, cheaper companies. Understand, companies may get cheaper. It doesn't mean that they're valuable. You have to watch what you buy. So the first thing on those percentages now, you want to buy quality. But what happens though, as that market recovery, then that's when the junk starts moving also, right? And you can take some risks. You can take some swings, right? You can take some swings at some things. But first, we want to buy those great companies, those once-in-a-lifetime companies, once-in-a-lifetime CEOs, that's creating enormous value. It's a great opportunity to get into those companies. And that's what we do. So we want to avoid the weak companies, and we want to focus on the best companies in the world. All right. So we want to track our moves. We want to log investments, what you bought, what you bought it at, what are the price level, builds confidence for the next cycle. Man, I keep a diary, right? I keep a diary of the trades that I do, of what's going on in the market. Keep a monthly diary, and I keep it on my notes in my phone. And I just spend some time, a few minutes. Hey man, in the market this happened. Hey, the Strait of Hormuz is, boom, this happened this year. This is why the market crashed. Hey, the market started going up at this point. These are the levels I was looking at. Hey, this was a good idea. This was a bad idea, right? This gives you opportunity to review and reflect on a decision. It's all about decisions, right? And we're just preparing ourselves to make the best decisions possible. That's the goal. Prepare ourselves to make the best decisions possible. And have an exit strategy. We want to buy at a discount. We want to sell at a premium. Not buy at a premium and sell at a discount. It happens all the time. People buy at a premium and sell at a discount. All right. So we're going to rotate. And then what I do is, of course, strategy I tell is, hey, we buy stocks and we buy them at a discount when the market presents us opportunities. And man, then we take some of those funds and we keep in cash to prepare for the next one, right? The next crash. I'm just not talking. It's what I do. And then we take those and put it in dividend funds to create monthly income for ourselves. Because we live in a monthly society. You just can't depend on a trade all the time, right? But we take the opportunities to accelerate our portfolios financially. And we take that acceleration and we put it into an engine that's going to lay us, that's going to deposit cash into our brokerage account on a weekly and monthly basis. And that's the strategy I teach. It's that strategy I teach in the club and what we're going to do. So the market rewards preparation, not emotion. Right? Scared money freezes. Prepared money executes. Man, it's all about execution. And we're just preparing to execute. So right now, you should be preparing for another move in the market. Now, we're still buying, right? We're still buying. But we're buying differently now than in the crash, right? It's a different strategy now because we're back close to all-time highs. So, you don't need to be all in on this part of the market. Okay? So, man, this is it. This is the strategy I use. And in the club, this is what I teach: options, dividend, long-term investing. We put options when the market is right, turn those options into dividends and long-term financial wealth. All right. And so as I'll say is that perfect opportunity, was perfect opportunity, still a good opportunity, the market, but you do kind of have to wait for how the market, because, the market isn't going forever, ever. And the last time we hit the levels we hit, guess what? We headed down. So I'm not saying that we're going to head down. Hopefully the market will push past those levels, those highs, and we go on the road for new highs. We'll see. But it's important for us, right, to prepare for the next crash, right? Prepare now for it. It's important. So, man, if you need somebody to help hold your hand and help show you how to organize an E-Trade account and help show you how to trade options and help show you how, and you need a free course in the club that is teach you how to trade options, and you need the basics. And you need a one-on-one session to help you with your confidence, to help you get organized, and help you prepare for you to make those gains that you need for your next wonderful vacation, for your next to finally have that savings that you always wanted, and not worry about living check to check. If you wanted a strategy, if you have a brokerage account and you just have it sitting around, a brokerage account without a strategy is like a gym membership without going. Have a gym membership and you don't go. What's the reason for that? You're just paying for the gym membership for no reason. Excuse me. So if you need help, right? I'm here every week. Last week, and I'm having problems posting on YouTube. I don't know what's going on, but I'm on Facebook as long as it posts somewhere, and I'll try to get it and distribute it accordingly. And I'll also have a podcast. And podcasts, you can get this in podcast form if you like listening while you're driving. All right, First Fruit Stock Club podcast. All right, so look, if you look in the link, there's a one-on-one. If you say, Donald, I've been watching you for a while and I'm ready to join the club, right? The link on there is to join the club. Basically, you'll have it'll take you through an onboarding process, and you'll set up a one-on-one with me. I help you set up your brokerage account according to the strategy. I tell you what we're working on. We meet every Thursday. We meet tomorrow, and we're going to talk about the trades I put in, as well as, information I give for tomorrow's club. Anyway, so we're always preparing 5 to 6 months out. That's what we're preparing. We don't prepare just for right now, right? We prepare for 5 to 6 months out. So when the market comes and it's changing and it comes to a new cycle, guess what? You're prepared for. So, man, if you're thinking about it, you've been on the fence, man, I'm just going to say to you, think about joining the First Fruit Stock Club. All right? We've been around for a while. We're growing. firstfruitstockclub.com is the website. Man, and guys, until next time, man, be blessed and be fruitful. God willing, I'll be here. Thank you. Bye-bye.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase, don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give